GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's hotter than the hot sauce you accidentally overdid on Taco Tuesday. I'm your host, Jay Hamilton, and today we're going to help you clearly understand what the F is going on in the markets and why are they dumping. Bitcoin is crashing. Is the bull market over? Or is this just a tasty buy low opportunity? Here to tell us the 3 reasons why Bitcoin crashed over the weekend and what you should do about it is Milk Road co-owner and head of research, Kyle Reidhead. Kai, welcome back to the show.
What's up, guys? I feel like during pullbacks, we need weekly therapy sessions where we come in and talk some sense into everybody.
Well, there's no better to talk sense into us than Kyle himself. So we're so grateful to have you. Let's start, Kai. Why are markets dumping right now, Bitcoin crashing in particular?
First of all, to be fair, we never really know why markets are crashing. People love to ask that question. And the answer is nobody has a clue. But there are 3 sort of big things that are happening right now in the Bitcoin world, which are sort of telling us what might be happening here. The first was the news today that the Mt. Gox refunds that they're doing, which is somewhere up around like $8 billion. It was supposed to happen around October. News came out today, this morning, that it was going to actually start in July. So they're going to start giving back the lost funds from those that were using Mt. Gox back in whatever it was, 2011 or 2012. And they'll be giving them back the tune of about $8 billion worth of Bitcoin. Of course, these people haven't had this Bitcoin in more than 10 years. What do you think they're going to do with it? Probably sell. So people are trying to front run that selling. No one has sold anything yet because they haven't received it yet. But people are very scared that when this ever happens, which we've had rumors for years, that when this happens, it's going to be obviously bring a lot of selling pressure to Bitcoin. So that was the big thing today that I think really started to get the markets moving, at least this morning. Then there's sort of like 2 other things that are going along with this. The first is miners are selling. So this tends to happen every cycle after the Bitcoin halving. The miner revenue gets cut in half essentially. And so they generally need to sell a lot more Bitcoin to pay for their assets. Now, when the price of Bitcoin goes up enough, then they don't have to do this as much. They can sell less Bitcoin because the Bitcoin's worth more. But in the very early stages of a halving, they have to sell more Bitcoin. And so there's more sell pressure. This happens every single time. So you can see up on the chart that over the last few months, it's just been down only for miners. And when price goes back up, so by the way, if you look at previous cycles, you'll always see this like few months of just like kind of choppy markets after the halving, which is basically what we're in. This is a big reason why is people get scared because the miners are selling, and also the miners are selling quite a bit of Bitcoin. So it's just again added sell pressure. So you have Mt. Gox, no sell pressure there yet, but coming, and people more just kind of front running it. You have the miners, and the third thing is the Germans. The Germans are selling, and they had about 50,000 Bitcoin in their wallet. They're down to 47,000. I guess over the last week or so, they have been selling. We don't know if they're going to be selling more or what, but this is, I think, Bitcoin that they've confiscated. Anyway, they appear to be selling it now. How much of this will they sell? We don't really know. But obviously, we're at a point in the market right now where there's not so much demand. Part of this is because of the macro environment. And then just you have a bunch of the selling pressure, whether it's real selling pressure or rumored selling pressure, doesn't really matter. The result is they're selling. And whether it's the Germans selling 3,000 Bitcoin or it's people selling because the Germans are selling 3,000 Bitcoin, either way, there's just a lot of sell news and sell pressure right now. And that obviously makes the markets go down. So that's the main thing that's kind of putting this pressure on the markets right now.
When you say it like that, it makes it sound so simple. The question then becomes, where does it end? Is this the end of the bull market? I'm being a bit exaggeratory when I say that, but it's you said we need a therapy lesson because we freak out and we have short-term memory. Where has anything changed on your current outlook of this bull market from a macro perspective outside of these sell factors that we just discussed?
No, not at all. I mean, I think we are, as I've been saying for a while, we're kind of just in the beginning of the bull market. Not the bull market, but we're just in the beginning of the macro side of this bull market. Central banks all around the world are just starting their rate cut and their liquidity cycles, right? We're just getting that started. We're just seeing Canada just started to lower rates. Europe just started lowering rates. The US is on pause, but eventually going to be lowering rates. Liquidity is starting to tick up in so many different countries. It's just happening. And we talked about this a few weeks ago. And I mean, even since then, it's gotten even better, right? Back when we talked about this, I think the episode was Now's the Time to Be Bullish on Crypto. There was no rate cuts in Europe or Canada, and now that's happening. And so I think the macro continues to get better, but it's still confusing for a lot of people because inflation is still high. Rates are technically still high, even though it's all about the rate of change, not what they're actually at. So it doesn't matter what level rates are at. It matters which direction are they going and which rate of change in that direction, right? And right now, the rate of change is going the other way where it's heading down. And so that's a time to be bullish. Same with liquidity is going the opposite way. And so macro is sort of just reaching its point where it's going to start to be a tailwind for us instead of a headwind, which it's been for the last few years. And so, I mean, we've managed to get Bitcoin to all-time highs with, I wouldn't say macro headwinds at that point, but like you could, I mean, if you were paying attention to the data, you could tell it was coming, but a lot of people were not at that point. We still had rates really high. We were still quantitative tightening. All that stuff's loosening up and it's just getting started. So in my opinion, when you look at macro, the sort of next phase of the bull run, the 2021 stage that we remember from back last cycle, or the 2017 from the cycle before that. Again, I'm talking liquidity cycles. We're sort of just entering that now. So on the macro side, I'm actually super bullish. It's just the on-chain side where you can be a little bit more bearish because there just happens to be all these entities selling Bitcoin. Now, FYI, that's just Bitcoin. Germany doesn't hold any ETH, or at least they're not selling any ETH. Mt. Gox isn't selling any ETH. So, and I don't just mean ETH, I mean anything else. It's just Bitcoin. So of course, Bitcoin kind of leads the market. So we got to look at what's going to happen there. But this is a structural issue on Bitcoin that is more probably short-term than anything.
Okay, so that episode from 2 weeks ago, which if you guys didn't listen to that, you're going to want to go back and listen to that because it all still holds true that all of those charts and that setup that we looked at, nothing has changed. So then why the panic? Everybody's freaking out. Let's look at this pullback right now. Is this pullback abnormal? Is this different than we've seen in the past? Or is this just the pullback that we all expected and we knew was going to come?
Well, this is the problem. And this is why there's so much panic is no one was expecting this because everyone started saying that we're going to have the accelerated cycle. I think we had to do an episode on it last month or 2 months ago, whatever it was. The crypto influencers or crypto Twitter got in this like narrative that, hey, this is going to be an accelerated cycle. The ETFs are so bullish. There's so much inflows. We're just, we went up so fast in Q4 of 2023 and Q1 of 2024. And so everyone's like, that's it. We're just going to keep rocketing up to 100K and then it's over. And it's going to happen by the end of this year. And we tried to tell everyone, like, guys, that's not going to happen. We will get a pullback. This is very normal. We always get pullbacks in bull markets. Like, I don't know what this accelerated cycle narrative is. And of course, what happened? Well, in March, a pullback started. And this pullback has been going for about 100 days. I think it's 103 days starting today. And people forgot about this accelerated thing and now just think like the whole game is over. And it's expectations, it's perspective, it's all these things that we always talk about. It's like, guys, this is completely normal. And in fact, we've pulled up a chart where we've looked at the 2015, 2017 cycle. And there was, I think, 12 pullbacks during that cycle. But what's interesting is in the middle of the cycle, and again, this is when I say the middle of the cycle, this is again the point of which macro starts to really lead it and rates go down and liquidity really starts to kick up. That's second stage of the bull market where things get a bit crazy. Well, before that happened in 2015, 2017, we had two pullbacks that were over 100, that were 133 days in length. Interestingly, that they were both exactly 133 days, which is kind of weird. But what I mean by that is it took 133 days to get back to the high that we were at previously. It happened twice. But interestingly, in these pullbacks, one was a 25% pullback. One was a 42% pullback. Guys, we're only at 24% right now. That's all that Bitcoin has pulled back. And everyone thinks that the whole thing's over. It's not even close to the size of the ones we had in 2015, 2017. After those two long, like extended pullbacks, it was game on. And that's when things just went absolutely ballistic for the rest of 2016 and most of 2017. And things were crazy. We still had pullbacks, but they were fast. And we were just doubling and getting multiples on our assets. And that's also when you have like ETH dominance and altcoins really take off. That's your altcoin season. Previous to that, the first part of that cycle was when Bitcoin did really well. And then if you look at last cycle, the exact same thing happened, guys. If you look at in 2020, which was the middle of the bull run, we had this long 163 day pullback. And this was 62.3% pullback. 62, 3 times bigger than the pullback we have today. If you weren't in the market back then, you do not understand what we had to go through. But anyway, once we finally got through this, remember 163 days is like what, I don't know, 4 or 5 months, 6 months, whatever that is. Once we got through that, it was game on. And again, this was the time where liquidity was picking up like crazy. Bitcoin dominance started to go down, and we just went, ETH and alts just went through the roof. This is the thing that we've been talking about on the show so many times, that we think the second part of the bull run, we always say we're about 50% of the way through. We think that that's coming. And so if we look at today, where are we at? Well, in my opinion, we're about halfway through the bull market, which we've been saying a bunch. We're at about a 24% pullback, and it's lasted for 103 days. It seems pretty normal if you look at all the past cycles as well. And so I don't know why there is so much panic and there's so much fear in the market. I guess I do know why. This will always happen, right? People forget to zoom out. A lot of people here are probably new, weren't here for those other cycles, so they don't understand the history of how this all works. But in reality, it's just pretty normal. It's not a thing to be afraid of yet. This thing could continue on for another. If we look at last cycle, I said 166. That's 60 more days. That's 2 more months.
I can't handle it, man. I can't handle it.
What are people going to do? What are people going to do if it's 2 more months? But this is, again, the expectations from this accelerated cycle, I think, that are kind of messing people up.
So not unusual to have these type of pullbacks. If anything, this pullback is actually short compared to past pullbacks. Could go longer so far. And it's on the low end at 24%. We've seen pullbacks in the past much higher than that, 40%, 45%.
Usually see them higher than this. Usually. One more point on this before you continue there is, look, just because I said the longest was 163 days last cycle, it doesn't mean we won't have this one go longer. It could go 200 days, right? It's not going to be the exact match from before. We're not going to have 2 at 133 days like we had in 2015, 2017. Maybe we will, but that would be very weird, right? So the story to take from this is it could be a long pullback, and that's just an extended pullback. Again, we have macro that's on our side. We're at all-time highs on like everything on chain right now. Innovation is going through the roof. Like everything is bullish crypto. Everything is getting bullish macro. And so like, do I know when the pullback ends? Absolutely not. I have no freaking idea, and I don't pretend to. But again, just market structure, it looks similar to before. Will it be the exact same? Absolutely not. So don't like give up at 163 days because we've never had one go that long. We've had many pullbacks go longer than that. Just what I'm saying is we generally have extended pullbacks in the middle of the cycle because this is where we sort of like get rid of the weak hands and move capital, which we talked about this, I think maybe last week. Capital moves into the whales who are not selling at this point, and the retail or whoever's buying right now, maybe people that, get their Mt. Gox refunds, maybe they sell, people who got their Celsius and their whatever else. Those weak hands move to strong hands. We build a strong foundation. And then when liquidity makes its way back in, prices have that sort of like foundation to jump and move, double or triple or whatever it is. So again, I think this is just very normal market structure, in my opinion.
If we look at past cycles, because you mentioned the past cycles already, what is the standard expectation? Because expectations are a dangerous thing here around pullbacks. We talked about the size of them. What about how many should we expect? Is this just a one-time thing?
Don't expect a certain number. I hate to say it. So if you look back in 2015, 2017, you can see we had, I think, 12 pullbacks in that bull run. If you look in the last cycle, it was 9. So will it be 12 or 9 this cycle? I have no idea. Will it be less? Will it be more? I have no idea. Again, don't care. The only thing you need to know is in a bull market, you're going to have pullbacks. And when I say a pullback, these are 20% or more. We're going to have many of them. We've already had, I think, 5 this cycle. And so we're probably going to have at least another 5, maybe more, maybe less. I don't know. But they just should be expected. Again, don't look at the price to tell you which direction we're going. Look at the on-chain metrics. Look at the macro. Like what's going on the liquidity cycle. These are the things that tell you the direction that we're going in markets. But then price won't just linearly follow that, right? We think that Bitcoin goes to 200K this cycle. It's not going to just go straight up and to the right. That never happens, right? But the thing is in crypto is no other asset is going from, what are we at, 60K to 200K in the next 12 to 18 months. That's actually insane. Maybe Tesla or Nvidia or whatever will, but a small amount of assets are going to go up 3x in the next 12 to 18 months. And so if you want that reward, if you want the benefit of this much upside, you need to accept that there's going to be volatility. You don't get an asset that goes 3, 4, 5x in 12 to 18 months without volatility, like crazy volatility. Even like if you look at the S&P 500, this is what most like financial advisors, they tell you, just buy the S&P 500 and just like dollar cost average. And that's like your pension fund that most people are told to do. And it gets you like 8 to 10% per year. Great. That was like the standard before crypto came along. People loved that. But even if you look at that, every year the S&P goes either up 40% or down 40% or up. And it's like, it's over time, there's insane volatility, but over time, the long term, you end up with an average 8-10% per year. Crypto's the same thing. You're going to get these massive, huge pullbacks, these massive, huge moves to the upside. And sometimes those are very short term, sometimes they're very long term, like our big bear markets. But over time, it's kind of up and to the right if you're in the right assets. And so you can either play it long term and don't even worry about the cycles, these 4-year liquidity cycles we always talk about, and just hold, right? If you've been holding since 2010, well, you've done a hell of a job. Or you can try to play it through these cycles. Maybe you don't want to hold it through the bear market, but expect in that bull market, you're going to have probably 10, 20% pullbacks. Maybe it becomes less this cycle because, I don't know, we have institutions, we have these like ETF flows that should be just kind of automated and passive, but we're not at that yet. We haven't turned on those passive flows of pension funds and endowments, just like auto bidding Bitcoin ETF every single month is not there. We already said that most of the inflows into the Bitcoin ETFs are just retail or are these like hedge funds. And so it's the same sort of market structure as we've had always before, right? It's going to be these wild ups and downs. But if you can stomach that volatility, that's how you end up getting these 2, 3, 4x's in a year. So you got to pay the price.
So you're not afraid of Mount Gox coming because we don't know exactly how that will go. Germany, having 50,000 Bitcoin, showing that they are going to sell some. When are they going to sell the rest? Nobody knows. You don't have concerns over these things?
Not at all. I think they're all noise, and you just need to put it aside. Like, does it have a short-term impact? Sure, we just saw it. Probably today was a short-term impact because of the Mt. Gox stuff. Is it going to matter long-term? No. I mean, when FTX blew up, if you sold at that moment, you sold the very pico bottom of this entire market. And that was the worst thing to happen to crypto in the last 5 years, maybe ever, right? And if you sold on that news, you literally sold the worst time you could have sold in the last 4 years. So like, do these things matter? Hell no, they don't matter. They matter in the short term, but unless you're trading daily, then it's completely irrelevant. Just close your laptop. Don't look at the prices or look, whatever you want to do. I look because then I buy, and I've been buying the dip for 3 months now and it just keeps dipping more, but that's okay. I don't really care. Now, this isn't to say like you should just stupidly always buy assets just all the time. You got to buy the right assets, number one. So like Bitcoin is one I'm not too worried about. ETH, Sol, the majors, right? Which we've been saying you should hold most of your assets in majors because they're not as impacted as much. But also, that whenever things go back into sort of bullish mode, those things are going to continue upwards. Are they going to go 1,000x? No, but they're not going to go to zero. I tell you that for sure. And so as long as you have a strong portfolio and you're not holding a bunch of shitty celebrity meme coins, then you're probably going to be completely fine. You shouldn't worry. If you've been holding 80% of your bag in MOG and Dog with Half and the other 20% in Mother and Daddy, like, yeah, you should be very scared and you should panic the hell out of that because that makes zero sense. So again, it depends on your portfolio, but overall, these kind of short-term noises, I don't think they really matter unless you're like a short-term trader, but that's not me. And that shouldn't be most of the world. You need to be 40, 50, 60 hours a week if you want to be trading this market. And even those people don't succeed very often.
Just over 50% typically, and that's the most stressful job in the world. So do not go down that path. I'm glad you brought up portfolio allocation and not being 50% in meme coins, because we're going to talk about that in tomorrow's episode, where we're going to break down this is the exact method or the playbook for how you capitalize on the rest of this bull market. We believe we have somewhere around 12, 18 months left. There is still massive opportunity to come, but a lot of people are going to fuck it up, and we want to make sure you guys don't fuck it up. So make sure you guys listen into tomorrow's episode to learn about that.
Is that with me? Am I coming on for that next episode too? Am I going to teach?
That's you. That's you, man. Yeah.
Portfolio allocation? All right, here we go. I got a lot brewing in this head today. Whenever markets dump, I always think, okay, what should I be getting rid of? How can I be optimizing my portfolio? What do I need to do to just like make it even better than it was yesterday? And so this is all I do in these moments. I don't do much. I don't move much. And I definitely don't sell out of the market. But do I want to add to a certain position? Do I want to get rid of some of the things that I was like, why am I holding on to this? I want to consolidate in these moments. So I got lots of ideas. We'll talk about all those in the next episode.
Kai, as always, thanks so much for your time. Thanks for joining us. In case you missed it, here's what else happened in news today. Marathon Digital Holdings, the world's largest Bitcoin mining company, has found an innovative way to utilize excess heat from their operations. In a pilot project launched in Finland, the company is using a 2-megawatt system to provide warmth to 11,000 homes. The district heating system works by distributing centrally heated water through underground pipes. Now, Marathon believes that selling this excess heat could provide a significant financial boost, contribute to achieving zero cost power for their operations. The company currently operates 11 mining sites globally and controls 4.8% of the Bitcoin's network's hash rate. Also, Metaplanet, the Tokyo-listed investment firm, will issue 1 billion yen, which is approximately 6.3 million US dollars, in bonds to purchase more Bitcoin. This move follows Metaplanet's declaration in May that it would adopt Bitcoin as a strategic treasury reserve asset. The company cited economic pressures in Japan, including high government debt, negative interest rates, and a weakening yen as reasons for its Bitcoin adoption strategy. This bond issuance follows an earlier purchase of 250 million yen worth of Bitcoin by Metaplanet earlier in June. Metaplanet's stock price surged over 12% following the announcement. That's all we got for you today. Thanks so much for listening in, everybody. Have yourselves a wicked awesome day. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.